Hi, this is Scott McClemens from CEO Velocity. We're talking about Customer 360, a, an application built in the business intelligence tool ClickSense with my partner Solve. And in particular, this sheet is looking at the tenure and migration of bank and credit union customers. Now, of course, Customer 360 can be framed for any business in any industry, but in particular, we're looking at banks and credit unions. And what we find here is that our most profitable households, those in our end zone, have a migration rate to a lower profit group of about 29%. Well, is that good or bad? We don't really know. We're going to find out in a second. But we also know that our red zone households, those in our second level profit group, are highly volatile. About 82% of them migrated either upward or downward into the mass market. So that's something that we want to keep in mind and understand what the magnitude of that is. So let's go do that. We understand that the end zone households that have migrated to red zone, that's about a negative $4.3 million swing in profitability for those households. Well, we don't like that, but it pales in comparison to the red zone households that have migrated to the mass market, about $14 million. We really don't like that. We need to find out what's going on there. Conversely, we do like the fact that the red zone households who have migrated to end zone have brought us an extra $14 million. So that is excellent. We also like the fact that when customers migrate mass market to red zone, we get an extra $5 million. So while we want to keep these end zone households where they are, we'd like to stem that migration rate from 29% maybe down to 20%, and that's a metric we can set as an executive committee. We can also really dig into this red zone group here and find out what's going on, what's causing these swings to go to either the mass market or the end zone. We want more red zone to end zone and a lot less red zone to mass market. So we're going to set metrics up for the migration of these households. We know 56% of the red zone households are going to mass market. We want to dial that way back to about 40% in the next year, and we'll figure out how to do that. Now, one of the things that we can look at is what we call tenure. So how long have customers been with us? So we're going to choose 1 to 3 years, and what we find is that's where all the volatility is occurring in the red zone households. So we know something is going on with this volatile group of red zone households in that 1 to 3 year time frame. We're going to do some research and hand it over to our head of retail, our head of mortgage banking, because we suspect something might be going on there, head of consumer lending, our chief marketing officer, and we'll let them form a little bit of a committee to understand what's going on, and then we'll have them report back to us. Now, something of interest here is the fact that when we do look at tenure by profit group, we find that half of our end zone households have been with us less than a year, so there's still a real onboarding process going on with them. They're getting familiar with us, they're getting familiar with our services. They might not know the entire spectrum of services that we have to offer, so there's a real opportunity to connect with them. Likewise, when we look at our end zone and red zone households that have been with us 4 years or more, we start thinking about loan maturities. And when do our auto loans and mortgage loans pay off? And these customers could really be in that time period where they're getting ready to move or refinance. That could present a risk to us. So we're going to start looking at our average maturities and try to get ahead of these customers, because we don't want them to just pay off or refinance and go somewhere else. We want them to stay with us.